What's up, everyone? It's Katty with Money Investing. An absolutely staggering day for the markets. Nasdaq here almost up 2%. We got the S&P 500 also pushing higher and the Dow Jones crossing back over 33,000 with a lot of big tech stocks here rallying aggressively. By the way, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, and of course access to all the private videos and lectures. April is here. By the way, 16% annual discount does expire tonight, so a few more hours left if you want to take advantage of that. And we're going to be starting our wheel strategy for options in April. Super excited for that. Again, link's going to be down below. So this right here is what the watch list looks like. AMD, Amazon, Nvidia, Microsoft, Apple, Meta, Netflix, Google, Tesla, everything just charging higher. AMD not so much. It was a little bit of an underperformer today, but Tesla up 6%, Google up 2.6%, Netflix, Meta, Apple, all of them rallying quite a bit. Now, I've got a bone to pick with some people in the comments, and the reason is because markets are now going higher. And people are like, Katty, you were so bearish in the last few weeks. Like, what's going on? Why is the market not coming down? Guys, I've mentioned this before. I'm not being bullish or bearish about a certain narrative of anything. I'm just literally trying to explain the reality of the situation and also going over my personal opinion and perspective on the market. If you don't like it, unfortunately, this is not going to be the place for you. If you constantly want to be fed bull or bear thesis, and that's the thing, that's really what you want to hear, I'm sorry, like I cannot provide you that. Maybe I need to be more diplomatic in a way that I, say things moving forward. Like, I don't know. But it's just not going to be me. And the thing is that, yes, in the last 2 to 3 weeks, we have talked about things that are a threat to the economy, a threat to the earnings, and puts us in a little bit more of a vulnerable situation. Think about it for a second. If we know about all these things, nothing can blind spot us. Isn't that correct? If we know about all the blind spots already, nothing is going to cause a problem for us. And like I said, even though I am, not super optimistic about where the markets are headed, I'm still long. I'm still overweight tech. This was my portfolio today, up a little bit over $10,000 for my long-term portfolio. Feels great, right? And I've also talked about in the past, back in September, this was a Discord post I posted for all the members literally 1 month before the markets bottomed, that today is the best risk-reward DCA, dollar cost averaging opportunity we've seen so far in 2022. I will highlight some reasons. Lowest point in the S&P 500, Nasdaq, and the Dow. Extremely oversold conditions. Double bottom on the S&P 500. VIX is at our target at 35, so when it's high, it's time to buy. Remember volatility? Several stocks hitting their 52-week lows. Yields have topped, and they literally did. They've been coming down since, and the dollar index also topped, and it also dropped from back in September. So it's not like that I'm only painting this really bad, bearish, doomsday scenario all the time. I'm looking at the data, and if it makes sense to be a buyer, I'm calling it out, as I did back in September, October. If I don't see the markets having a lot of upside, or just, there's not any opportunities out there, or the valuations are too high, I'm going to call that out. I'm not going to pretend that it's not happening and be like, hey, we're going to the moon. We're just back to all-time highs now. This is it. QE starting. It's time to buy. That's just not me. I'm sorry. That's not me. And this right here was back in February of this year, which I also got a lot of backlash for because, again, I was trying to caution people. And I mentioned that I know the sentiment is very optimistic and I don't want to poke the bear. This was literally February 2nd. You can see the date over here. February 2nd. You can see the date. You can go back where the markets were, where the markets were back then. And I mentioned that I always want to give you a realistic picture of the market and share my unbiased objective opinion. I want the markets to rally. Mentioned that. I want the markets to rally. But I can't ignore the fact that we are stretched to the upside. Like, I can't, folks. I can't. It's purely technical, nothing more, nothing less. As shown on the chart, every time the RSI on the Nasdaq has crossed over 70, we have seen a pullback, especially in this bear market. Would this time be any different? It's possible, but I doubt it's not. I'm not saying that we're at the top of this or this will lead to a big decline, but only suggesting you remain cautious. February 2nd, you come back where the markets were. This was February 2nd, right here, 12,200. We dropped over 10.4% in February and in the middle of March. Going into the next 1 month and a half, we dropped over 10.4% after this warning came out. So bottom line is that I get a lot of comments saying that I'm either too bullish or too bearish. We gotta get rid of that. Like, we gotta really get rid of it, because I'm literally just sharing my unbiased objective opinion. If I think that it's time to buy, I will call it out. If I think it's time to be cautious, I will tell you that. And if that's not something that you want to hear, then unfortunately, I'm sorry. Like, I know the reality sometimes hurts. I know, I get it. I've been told the truth many times, and it's hurt me quite a few times. Okay. And I know it's not what you want to hear, but that's how we grow. That's how we continue to move forward. And I'm just trying to cover all of our blind spots. That's all it is. Anyway, enough with my rant. And this was me back in November, actually. The legend of the Lucky Bull is coming. Remember, everybody? I was in Zurich at the time. Actually, this picture was taken in Italy. The legend of the Lucky Bull back in November. And since November, NASDAQ is up double digits. So, hey, something definitely is working in the right direction. So congratulations, everyone. I really am truly happy and genuinely happy for all of you, for all the profits for the day. And of course, the market's pushing higher. And now we're approaching up to a resistance, which I'm going to go over in this video. I'm going to talk about the resistance that we are coming up to. But anyway, so PCE numbers came out, personal consumption expenditure. So we got a very good report. So personal income was up 0.3% on a month-over-month basis. We got, PCE, personal consumption expenditure. So inflation numbers were down. And as a result, markets absolutely rallying on this news. And, very, very good report for PCE. So year-over-year came down to 5% from 5.4, and core also came down to 4.6% from 4.7. Now, we also do have interest rates which are higher than actual core PCE. That's good, because interest rates now on a real basis are positive when you account for core PCE. Not so much. Well, there's another 25 basis point hike priced in. So maybe after the next meeting in May, the actual interest rates with respect to the PCE, headline PCE, will also be positive. That's a good sign. So stocks closed higher Friday. NASDAQ notches best quarter since 2020. So stocks rose Friday as Wall Street wrapped up a volatile but winning quarter that saw more Federal Reserve rate tightening and mini financial panic spurred by the collapse of Silicon Valley Bank. So the quarter, the week, and the month is over, and very, very strong gains coming in with the entire market pushing higher. This is something from a psychological standpoint that I also wanted to talk about, that it's really important to kind of track your thoughts and track your emotions, how it's kind of playing a role in your decision making depending on what the markets are doing. So, unfortunately, what I see almost always, and I saw that in our Discord as well, is when the markets rally, there are statements like we're going to the moon, stocks only go up, all-time highs coming soon. They start to pop up more and more, right? And when markets sell off, you do see a lot of sentiment that's around, world wars coming, or it's the end of the world, sell and get out. It's very common, right? Because it's recency bias. When markets go up, everybody's like, it's time to buy. When markets sell off, everyone's like, it's time to sell. I really want you to consider and think about maybe switching that up a little bit, right? So maybe when the markets are rallying, it's also suggesting that risk is going up, right? It's simple math. When markets go up, when markets rally, risk goes up. So I did trim a little bit of NVIDIA today. I did trim a little bit of AMD today because my call did expire, and I will get my shares called away at those levels, and both of them are very heavily profitable. So we'll be trimming a little bit in both positions to lock in some gains, lock in some profits. And when markets sell off, obviously, as I mentioned before, best time to dollar cost averaging, it's you're getting a lot of good risk reward trade-offs. Markets are oversold, so those are the times to be buyers versus sellers. And when the markets are rallying, it's you definitely want to be considering what you want to do. Especially, if it's a trade, right? If you are trading it, then definitely you want to be looking into locking in some profits, which is why I mentioned for some of the trade ideas today. I literally mentioned as Vertex was pushing higher, it's time to kind of consider locking in profits. Don't hesitate to do that because it's already moved up so much. And then if you take a look at Eli Lilly, also pushing higher on the day, not as much as tech, but continues to push higher at our target $353. And then I also mentioned for Alibaba, another one of our trade ideas, that don't hesitate to lock in profits considering how much it's gapped up and pushed higher and continues to push up as we progress here. And then another one, Johnson & Johnson, is now starting to recover a little bit, so it's now starting to push up. It's up another 1% today. Target's a little bit on the optimistic side at 168, but of course it's a little bit far out. but we'll see how it recovers moving forward, as the RSI MACD also looks a little bit on the more bullish side moving forward. So just something to consider from a more, psychology of investing standpoint. So this was the market. Tesla up 6%, Google up 2.8%, Meta, Microsoft, Apple. We got Nvidia, AMD, everything here pushing higher in energy sector, industrials, healthcare, financials, basic materials. And I also mentioned the Discord that I think today's sentiment can be very much regarded as, quote, window dressing, because today's the last day of the quarter and a lot of hedge funds, big money managers, big funds, they need to kind of, send out their prospectuses, and they need to send out their reports to their clients. And, they'd much rather look at some of the big tech companies that they know of and have done really well, as opposed to anything that the hedge fund might be trading on during the quarter. So there's a lot of window dressing that does happen. So again, we'll find out what happens in the first week of April. Unemployment numbers are going to be coming out soon. But of course, a very, very strong close to the day, to the week, and to the month, and to the quarter as well. So there we go. Entire market's pushing higher. All 11 sectors in the S&P 500 were green in the last 1 week as well. All 11 sectors in the S&P 500 are up in the last 1 month. It's kind of like a split market, so we are both back and forth here. And natural gas, soybean, Russell 2000, everything pushing higher with the oil prices and lumber coming down. And Bitcoin's just a little bit over 28,500. So Marathon was up over 11%. Riot, all the GBT, Grayscale, Bitcoin Trust, everything was pushing higher. Ethereum back over $1,800 as well. So volatility absolutely getting crushed, down a little bit over 1.6%, now coming down to under 19 levels. And again, when the VIX is low, it's time to look out below, and when the VIX is high, it's time to buy. Remember that. And right now it is at a really low point. Crude oil continues to push higher, so we are seeing some momentum in crude. It's back over $75 per barrel. It did result in energy going higher today, like Exxon and Chevron, they were all pushing up. Occidental was also green. But the next target for oil is going to be closer to $81, $80 per barrel, so that's going to be the level to pay attention to. And again, if oil keeps pushing up, that's going to put some more pressure on inflation in the future prints. Something to keep in mind moving forward. Bitcoin here, again, was very green. Marathon was up 11%, Riot up 9%, Grayscale Bitcoin Trust didn't really rally all that much, but up 3.4%. It's also a lot less volatile compared to some of the other miners, but Bitcoin here back over 28,700, so really rallying higher, and Ethereum also at 1837, so pushing up further on the day. So going over to the markets, S&P 500, we are now approaching a resistance, a very important area of resistance for the markets, kind of inside this 41 to 4,200 levels. So this is an area, of resistance, of a red rectangle that we need to watch. For S&P, we have gotten rejected at these levels not once, but twice, and even 3 times. So every time S&P has gotten up to 41, 4,200 in the last year, it has dealt with some strong selling pressure, resulting in for us to come down. Now, of course, during that time, we've also had a lot of other macroeconomic data points. Like I believe back in May, this consistent sellout was the Jackson Hole meeting, I think, where the Federal Reserve and Jerome Powell kind of really had a hawkish tone. This right here, we had some more Fed meetings. We had some other consumer data that came out that wasn't super good. And of course, at the end of December, we also had again the Fed meeting, the FOMC reports, the SEP, all that numbers coming out, and then now starting to push right back. And then we saw a technical pullback for the market. So right now we're getting back up to that resistance. That's going to be at 41 to 4,200 for the S&P. That's the level to watch, all the way up to 4330 if and when we break out past 4,200. Support level is going to stay put at 3774, all the way down to 3,500 for the S&P 500. Talking about the NASDAQ, and NASDAQ also approaching up to its resistance, a very important level at 12,280. So this right here is going to be that level to watch. And hey, if it breaks out, gets up to 13,200, great. All the big techs are going to be rallying. I'm happy. But I also want to continue to re-emphasize on the idea in terms of valuations and, of course, a risk reward, right? Is this the level to be actual buyer of stocks? You can make a case for individual companies, but on an aggregate basis, I do still think the valuations are a little bit stretched. So I'm happy to hold on. And if the markets keep on going higher, I'm happy to trim some positions and then to kind of rebalance the portfolio a little bit better. But resistance is going to stay put at 12,280. So that's going to be the level to watch, all the way up to as much as 13,200 for the NASDAQ moving forward. And right now we're at the same level as we were back in February when that post, when that Discord post was announced. And of course, we did see a bit of a pullback. RSI is not quite overbought yet. I mean, back on February 2nd, we were, and that's why we did see a bit of a pullback, but right now it is not. So we'll continue to monitor, what happens with the RSI, with the MACD, and of course, the price itself. Talking about Apple now. Apple, ticker symbol AAPL, continues to charge higher. My next target's at 177, so that is a level to watch for Apple stock. That's going to be over here. And of course, the RSI also now getting up to a little bit on the overbought side. So again, caution is advised. Next up, we're going to talk about Amazon. Amazon also continues to push higher, although getting up to its lower high. So we got a pretty strong lower high resistance sitting for Amazon right over here at roughly around $105, $106 per share for Amazon. So that is going to be that next level to watch. And right now, we're still in the context of this lower highs and lower lows. It's still in the context of a downtrend, but that lower high is going to be the one to watch. Talking about the big winner on the day, Tesla, up a little bit over 6%. Absolute breakout over $200 per share, a resistance that we have been talking about for quite some time. And this right here is going to be that next level to watch as a resistance, sitting roughly at $215 to as much as $230. And we have gone rejected at that level previously and also supported at that level in the past as well. So that is going to be a very, very important level to watch for Tesla. Talking about PayPal. And PayPal here continues to push higher, a little bit over 2%. Lots of consolidation for PayPal, though. My fair value is going to stay put at roughly around $70. And this right here is going to be that lower high for PayPal to also watch moving forward. And again, lots of consolidation for this company at the moment. Talking about Square, and Square is almost now back up to the same level as it was before the short report came out. Not quite at the exact same level. It was at over $77. And right now trading back over $68. It got a nice validation of that support at $58, $59 per share for Square. So very nice amount of momentum coming back in from Block. We do still have a very, very small gap that it needs to fill eventually. NVIDIA up a little bit over 1.44%, so 277.77, and the next resistance and the target that we have talked about is going to be $292. This right here is going to be that level to watch. I think I ended up exiting out a little bit at closer to 276.50, right around those levels. But yeah, next resistance at $292. Incredibly oversold, no doubt. And the valuations also, you guys already know where I stand for the valuations on NVIDIA. Advanced Micro Devices, I did trim a little bit today, or not really trimmed actively, but I do have a call that expired on March 31st of today and will be called away of my 100 shares, which is going to be a small trim for me for Advanced Micro Devices. But the next resistance really is going to be closer to $102, $103. So this right here is going to be that level to watch. And support level, of course, we got a higher low sitting right over here for Advanced Micro Devices. Meta, back over $207 per share, actually $211, almost at $212. So very, very nice move, up almost 2%. Next target's at 222, so $222 is going to be that level to watch for Meta. That's the next resistance. Support level is going to stay put roughly at around $198, close to $199 per share for this company. Talking about Netflix, and Netflix here also started to move higher, so up another 2%, continues to move up. This is the technical, update that we had from our previous videos, and the next resistance and the target is going to stay put at $366 to $367 per share for Netflix moving forward. Talking about Google, and Google here also up very nicely, up a little bit over 2.6%, so $104, and support level is going to stay put at close to $101, close to $100 per share, and the next resistance all the way up to 108, 109. That's going to be the level to watch and pay attention to, because we have even recently gotten rejected for Google at those prices. Talking about Microsoft, and Microsoft on the day was also green, 1.5%. So again, this is the analysis from previous videos. The next resistance really sits at roughly around $292 to $293. This right here is going to be that level to watch for Microsoft moving forward. Last but not least, we got Shopify, and Shopify here also green on the day, up over 3%. Starts to fill in that gap little by little, and the next resistance and target is going to be closer to $54, $55. That is the next resistance, as we have gone rejected at that level more recently back in February for Shopify. So hope you guys enjoyed this video and a complete update on the markets. Next week is big unemployment week. Inflation numbers came in very good this month, or in other words, this read for last month. So again, new month, new unemployment numbers, and of course, inflation's due on April 12th. So hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. Remember, today is the last day to join. We've got 2 hours left for that 16% annual discount. So always happy investing. I'll see you all in the next video.